In this video, we're gonna go over 4 reasons why you shouldn't get a hard money loan. Hey everyone, my name is Sean, and on this channel, we go over real estate investing tips, strategies, and current events to help you learn more about the business and to help you become a real estate investing boss. And I'm also a hard money lender. So why would I tell you guys not to get a hard money loan? Hard money loans are high interest loans that are underwritten on the hard asset itself instead of on your own personal credit strength. They let you do real estate deals that you otherwise wouldn't be able to do. As an example, I personally wouldn't be able to buy $1 million property just based on my own personal salary. But with a hard money loan, as long as I have enough down payment and the resources to complete the project, I can get a hard money loan to buy a project, fix it up, and sell it at a profit. Hard money loans are a great way and a great tool for people who know what they're doing. But like any tool, if they're used incorrectly, then they can cause some serious harm to the person using it. And before being a lender, I want to be a friend, making sure that I help you guys out in your real estate investing journeys. So here are 4 reasons why getting a hard money loan might not be right for you. So number 1, if you don't have enough down payment, a hard money loan might not be right for you. Large hard money lenders will typically require that you put down 10 to 20% of the purchase price as a down payment when you purchase the home. They want you to have skin in the game. They just want to make sure that you don't take on a bunch of real estate projects and then leave when things start getting tough. They want you to stick in and stay in the game. And they also want to protect their downside in case they have to foreclose on you. But if you happen to come across a really great deal, but just don't have enough funds to close on it, you can find a partner who's willing to put down the money for the down payment and the closing costs. Then when you finally sell the project, you can split the profit 50-50. It is a lot harder to network and find a partner these days due to COVID, but there are still a lot of online virtual meetups that you can join. You can find them on meetup.com or on BiggerPockets. And if you guys want, feel free to join my meetup group. We have around 1,500 members and we meet up online at least once a month. You can find our meetup group at meetup.com/everythingrei. So number 2, you shouldn't get a hard money loan if you do not have enough reserves. Hard money loans are a short-term, interest-only loan with a very high interest rate. So that means that all of your monthly payments are only going towards the interest and will not go towards paying down your principal. And in the worst case, if your project takes a very long time, then your loan may come due and you might have to pay an extra % of your loan amount just to extend it. So by not having a sizable amount of money in reserves to make these monthly mortgage payments and potentially enough reserves to pay for this extension fee, you might be forced to sell your house at a very low price just to get rid of it. Having the risk of running out of money before your project is done is a very bad place to be in. So trust me, you want to make sure you have enough reserves. And in fact, as a hard money lender, we require that our borrowers have at least 6 months worth of these interest payments in a liquid account somewhere so that we know that they have the ability to pay for this loan for at least 6 months. And number 3, these loans have a very high interest rate. So like I mentioned before, these loans have extremely high interest rates relative to other loans. These hard money loans are going to be underwritten based on the hard asset itself versus your own credit strength, which means that we can do the deal, but it's a riskier loan for us, the lender. And that's why we charge these higher interest rates. So if you're not careful and your timeline slips, then your profitable deal may no longer be profitable anymore. So if your deal is pretty tight and there's not a lot of profit, it may not be a good deal to buy this one with hard money. If you can, maybe partner with someone who has a lot of cash who can do this deal and not have to worry about paying these extra monthly costs. And likewise, if you are able to finance a property using a traditional or conventional loan, it's probably better to do it that way. The downside of using a conventional loan is that they have stricter lending requirements, they base it off your own personal credit strength, and it can take around 30 days to close. If you have enough financial strength to get a loan like that, then it's definitely worth it to get a lower interest loan versus a hard money loan. And 4, you should have multiple exit strategies before getting a hard money loan. Because like I said, if you have a hard money loan, then the interest rate is very high, it's interest only for just 12 months, and if you're unable to complete your project during that time frame, then you run the risk of having the loan being called due, and if you don't have the money to pay it, or if you're unable to sell the house in time, then they could just take the property. And because it's such a high interest rate, you want to get out of it as soon as you can. So flippers do this by getting into a house, getting all the permits ready, and turning the house ASAP, putting it on the market and selling it. These pro flippers are looking for fast ways to buy, rehab, and sell their properties. But what happens if things don't go as planned? Like, what happens if your permits don't go through and you're unable to do this expansion that you expected? Or what happens if you completed your project, but now your property is just sitting on the market for months and there's no activity on it? It's a really bad situation to be in, and trust me, I know, you can see my story of when that happened to me in my nightmare story over here. So you need to have these multiple exit strategies in case things don't go as planned. So some flippers turn their properties that can't sell into rentals and then refinance out of their hard money loan into a more conforming and lower interest loan. In that time, they convert that property into a rental and start collecting rents from their tenants. The rental income helps them break even with their current loan, and after a few years, they might put the property back on the market to sell it and get their capital back. So when you're buying a property and you're getting a hard money loan on it, think about your potential exit strategies. If you can't do an expansion, will a regular flip work? If a regular flip doesn't work and just sits on the market, can you convert it to a rental? Do you have the ability to refinance out of this project? One of my personal downfalls was that I bought a property that was too expensive for me. So even though we bought it with hard money, we rehabbed it, I knew in my head that this property would do very, very well. It didn't even matter because I wasn't able to hold on to it, because I wasn't able to do the refinance, because I didn't have enough W-2 income to refinance out of a hard money loan. So even though I've converted it into a rental and it's generating a good amount of income, because I have this hard money loan that I'm unable to get out of, I'm still losing money every single month. And that takes a huge mental drain on you. If I invested in a cheaper neighborhood, then I could have possibly refinanced out of this hard money loan, done the same strategy, and kept the property for enough time for it to appreciate again, and then for me to sell it without taking a huge loss. So getting a hard money loan can be a great tool for you to buy and profit from real estate investing. But like I mentioned before, it is a tool. If used correctly, it's a great asset for you. If used incorrectly, it can hurt you immensely. So before you take out a hard money loan, make sure you know what you're getting yourself into by watching this video over here where I talk all about how hard money loans work. And if you finish watching this video and still think that getting a hard money loan is right for you, feel free to contact me and I'll hook you up just for watching this video. You can schedule a call with me with a link down in the description below. If you guys have enjoyed this video, I'd greatly appreciate it if you smash the like button and subscribe to the channel to see more videos just like this one. And let me know what your thoughts are on why someone should not get a hard money loan. Leave your comments down in the comment section below. Thanks for watching, guys, and I'll see you next time. Take care.